at current prices, there's no way that they could back 40% of the currency. I mean, you probably have to see, I don't know, pick a number. I'd have to do the math to actually come up with a number. But I mean, it should certainly be well north of $10,000 an ounce. And really, that's what's going to happen here is that the East is going to take control over the pricing mechanism of gold. And LBMA and COMEX are basically going to go away. I mean, they can put whatever numbers they want on an ounce of gold.
Gold reached a record high on Wednesday, climbing to $2,750.15 per ounce amid heightened geopolitical tensions in the Middle East, anticipated shifts in U.S. monetary policy, and investor concerns over the upcoming U.S. presidential election. Analysts cite increased demand for gold among high-net-worth individuals and institutional investors, who view physical gold as a stable asset amid global economic uncertainties. Even with the Federal Reserve's recent interest rate hikes, which typically lower demand for non-yielding assets like gold, the metal has climbed by 40% this year, showcasing its renewed appeal as a safe haven asset. Brics nations have generated significant global interest with discussions around creating a gold-backed currency and establishing a dedicated precious metals exchange, which could impact traditional pricing mechanisms. Brazil, Russia, India, China, and South Africa collectively hold over 20% of the world's gold reserves, positioning them strategically to pursue a gold-backed monetary system that could reshape the global financial landscape. By consolidating their reserves, these countries could support an alternative currency framework, reducing dependence on the US dollar and creating a more diversified reserve system. Analyst Bill Holter suggests that if Brics were to move forward with a gold-based currency, it could drive substantial demand for gold, potentially pushing prices above $10,000 per ounce if the initiative gains broader international support. Such a shift would attract countries aiming to diversify their reserves away from the dollar, fostering a multipolar reserve system. A Brics-led currency system would challenge long-standing pricing structures currently dominated by Western institutions, notably the London Bullion Market Association, LBMA, and COMEX, which have historically played central roles in determining global precious metal prices. These organizations operate within frameworks largely influenced by Western economies, which Brics nations view as disproportionately benefiting the US dollar. By establishing an independent gold exchange, Brics countries could set regional pricing standards that are more aligned with their economic priorities, potentially creating a new benchmark for the global gold market. As we bring you clips from the discussion, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this.
The only way to do that would be you'd have to do the math as to what the total size of trade between all the Brics nations is going to be. And then you've got to have enough currency to settle that trade and then plug in 40%, and that's the amount of gold. And I can tell you, at current prices, there's no way that they could back 40% of the currency. I mean, you probably have to see, I don't know, pick a number. I'd have to do the math to actually come up with a number. But I mean, it should certainly be well north of $10,000 an ounce. And really, that's what's going to happen here is that the East is going to take control over the pricing mechanism of gold. And LBMA and COMEX are basically going to go away. I mean, they can put whatever numbers they want an ounce of gold, but if the East is pricing it far higher, they'll just come in and buy every ounce that's available for sale in the West, and they'll have it delivered, and the gold will no longer be in the West. The gold has been moving from West to East now for 25 plus years. First off, it's only the little guy who's selling. I mean, in this year, like I said, I've seen more sales, but they're all small. 5,000, 10,000, 25, 50. Business in North America was good for the first 5 months, and then June, July, and August, it was slow. And I can tell you it's definitely picked up in September and here in October. I've done a huge amount of sales just in the last 4 weeks alone. So big money is definitely moving into gold and silver. Uh, to speak to, does gold have the momentum? Gold is not overbought. It's close to being overbought, but like I said, gold has moved literally like a bulldozer in first gear. You haven't seen any big, huge spurts. We've not seen $100, $200 days, but those are coming. We could go on like this, and in a month or two, or even less, we get a spike. I mean, you could see $3,000 gold pretty easy. Silver broke through 32.50 on Friday. We're trading. We traded as high as what, 32 or 34 and a quarter, 34.50 today. Silver to me looks like that's going to be explosive. I mean, all along I've said that silver would be gold on steroids, and that's just a function of the ratio. The ratio at, I think it's 81 ounces buys 1 ounce of gold now. I could easily see that in a fairly short period of time come down to the 50-40 zone, and you'd basically have a doubling of, silver's action versus gold. It will outperform gold, I think, at least 2-1.
Gold prices have dramatically risen since 2000, increasing from around $260 to $2,750 per ounce. This escalation indicates a significant decline in the dollar's purchasing power, approximately 90% when measured against this tangible asset. While the US dollar remains strong compared to other currencies, its value has diminished in real terms, raising concerns about the sustainability of its dominance as the global reserve currency. For decades, the US has leveraged its military power, technological advancements, and control over natural resources to maintain its global position. However, economists argue that the dollar's status is a crucial pillar of US hegemony, particularly over emerging economies increasingly seeking alternatives. Recent discussions among various nations, including European Union members, highlight a growing interest in establishing independent payment systems that reduce reliance on the dollar. Despite accounting for approximately 90% of global currency trading, the dollar reached a 20-year low in foreign exchange reserves in 2022, signaling potential vulnerabilities in its dominance. As the dollar depreciates, American consumers could face significant inflationary pressures. If the dollar loses its primary reserve currency status, the purchasing power of average incomes may fail to keep pace with rising costs, further straining household budgets. Bill asserts that this erosion of purchasing power could lead to a lower standard of living for middle-income families, making it increasingly difficult for them to cover everyday expenses and maintain their quality of life.
I mean, for hundreds of years, it was 16-1. And the reason being, it comes out of the ground basically at 10-1. And because gold and silver had to be moved or transported, by carriage or mule or whatever, man discounted the price of silver. And it was agreed upon that a 16-1 ratio versus 10-1 was appropriate. It was enough of a discount to entice people to move 10 times as much silver as opposed to gold. So that's why it was discounted from 10-1, because that is the ratio that it comes out of the ground. I could easily see it coming down to the 20 to 30 range, and that would make sense. An additional push to silver is that Russia announced last week or the week before that they're going to start buying silver. Well, guess what? There is no silver to buy. I mean, silver's been in a deficit now for 4 years. There's no above ground supplies where Russia's going to be able to buy their silver from. And what will end up happening is, just by whatever buying they do, if it has to come off of COMEX or LBMA, those inventories, they're going to fail to deliver. And then it's game over. You get a reset of everything. And I don't know, where does gold and silver reset? I think 20 is probably a decent number. I heard some people say that, silver is going to become more valuable than gold, and I think that's laughable. If you know that a recession or very hard times are coming, you want to go to cash. And the ultimate cash is gold and silver. They are money. All of the fiat currencies, look at their names. the dollar, the pound, the lira, the peseta, the peso, all of those names signify a weight. And what was that weight? It was gold and silver. All of these currencies are derivatives of gold and silver. You don't want to own derivatives. You want to own the real thing. I mean, you could call it an attack if you want. It's basically the rest of the world is walking away from the dollar because they know, I mean, they can do math just as well or better than you and I can. They do the math and they're like, the dollar is unsustainable. We import $1 trillion worth of real stuff every year, and we export $1 trillion that have no backing, and they're free entirely to be printed. So the world is moving away from dollars. There's no question about it. You can call it an attack if you want. I don't think that that's the way the Brics are trying to portray it, because, you know, they don't want an actual war. They just want free and fair settlement. And you mentioned Russia being kicked out of the SWIFT system. If you look at a chart from a year ago, last October, gold was $1,700 an ounce. Now it's over $2,700. Gold started moving, and it's pretty much been like a bulldozer in first gear for an entire year. Gold has gone higher because a year ago in October is when the U.S. government started talking about taking $300 billion of Russian treasury reserves and basically stealing them. What's happened is other countries looked at that and said, hey, wait a minute. If they can do this to Russia, they can do it to us. So you've seen less buying of U.S. treasuries, and you've seen selling of U.S. treasuries by foreign nations that understand where this is going to go. Oil and trade has been settled in dollars since 1971 or 73, the petrodollar. What's going to happen is once the Brics unit comes forth, you're going to have, a third or better than a third of the world is going to do all their trade transactions and trade settlements in non-dollars. So, I mean, that's a huge amount of demand, which it will no longer be necessary. And those countries that have stockpiled dollars in order to settle trade, they're just going to offload those dollars.
Rumors of a potential Brics currency partially backed by gold have sparked widespread speculation, given the significant gold reserves held by Brazil, Russia, India, China, and South Africa. While no official move has been confirmed, a Brics currency could challenge the US dollar's global role, especially as intra-Brics trade increasingly bypasses it. For investors, this shift signals opportunity. As central banks in these countries accumulate more gold, demand and prices may rise, as reflected by the recent surge in gold futures. Please share your thoughts on Bill's analysis in the comments below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.